Kenya's main share index rising to a near 2-year high yesterday. Positivity really taking hold of the Kenyan market this year. How much of that impetus is being driven by local factors and how much global?
Well, there are two factors that are driving the market right now. Number one was the fact that we are coming from a very low base, especially if you look at if you're comparing it with January 2011. Just to highlight the extent to which that has happened, some stocks right now are still trading despite the rallies below book values, and some are trading at perhaps or close to average PEs or historical PEs or PBVs as well. So we've come from a really low base, and that's that which brings in the second point, where the market has been underwritten largely by foreigners, and I must say on this one, locals are Johnny come latelys. So largely, I think the valuations made a lot of sense. We still have some shares that are still well valued as we speak. Still, there's more scope for growth if the macros behave and if the politicians behave. But largely, I think foreigners have been having a lot of faith in us, and probably more than we've had in ourselves. And the locals are beginning to come into the party right now and trying to pick up and benefit from the rally.
Johnson, having said that, we've seen this bull run, pretty narrowly based. Do you see this broadening as we move forward in in what a classic bull market should actually look like?
Well, I don't know if. I suspect you could say it's probably a classic bull run, because you've got the economy growing, you've got the stock market tracking it, and of course participation now is probably what we'll be looking out for. Remember, we are coming off a period where we've had crazy interest rates. Interest rates are not, especially for retail investors who are able to access credit. Credit is still not that necessarily that much available, but we're seeing interest rates are still coming down lower. Central bank lowered the CBR rate, so that should help generate some liquidity for the market.
With that in mind, Johnson, I mean, with the central bank rate sitting in single digits, we've got to take into consideration that we should be seeing a shift in interest from the debt market into the equity space. To what extent is that coming through?
Well, you see, even from debt angle, there's still good returns to be made. So some people will still want to, especially the risk averse, who still seek a bit of risk in from politics, especially that you're going into an election period right now, might still want to maintain some amount of debt. But and of course, there's also the feeling that perhaps some people may feel that they have been left to the bus. Because of the rally that has gone on. It seems quite steep if you chart it out, and maybe they want to stick with what they know best. So it's not necessarily the case that you'll see people jumping from debt to equities. However, we should see a bit of a shift, more of a shift, because we know there's some stocks still left out there that have not yet seen the rally, and that should benefit from the bullish outlook in the market.
Regarding the debt market, we've heard that both the Central Bank of Kenya and the Capital Markets Authority have received complaints from 6 commercial banks, 3 of them which are listed on the NSE, over a $17 million questionable amount in dealings in bond trading. I mean, the complaints all raised between October the 18th and December the 31st, 2011. To what extent has that worked to hit sentiment in that space?
Well, we've seen trading collapse, probably because of maybe there's a lack of confidence in the debt market, and perhaps that's a danger of having the regulator managing the CDS as well, and most of the trading system, because when the regulator come market participant is involved in such shenanigans, sentiment becomes, confidence will be hit. So, but we hopefully will see that work, because I think it was a result of the switch. Some individuals, 2 or 3 or 4, who took advantage of the switching systems, and were able to play their tricks. But I think it was caught on time, because it didn't go on for too long. And they're resolving it.
Well, let's put the spotlight on some of the companies that have been stealing attention on that end. Kenyan seeing much support, gaining for a third straight session yesterday. We have that counter sitting at 11 shillings 50, and we had Genghis Capital last week raising its price target on that stock, saying that we should see it heading 20 shillings 90 during the course of this year. Your view on Kenyan?
Well, for the longest time, Kenyan has been trading at a fraction of its book value, perhaps because of maybe its low ROEs, and also partly because of the bear market that preceded this bull market that really wiped out a lot of value of the stock. So we see 2 or 3 factors that we can look out for when you talk with regard to Kenyan. Number one, they've got a lot of deals in the pipeline where they'll be increasing their power generation. So that's one. The second thing is obviously the dip in interest rates. And the third thing is that again, like I mentioned earlier, they were trading at a proportion of a fraction of book value. Even up until, I don't think they've even hit 50% book value yet.
Johnson, in terms of cost, I mean, it means more capex spend from the company, specifically where the attention is on their plans in the pipeline at this stage to increase power capacity on that end. To what extent is the company going to be able to see return on investment by passing on higher tariffs to consumers, or is it more a case of needing to reap that return via broadening their scope of access, so that the number of people that have access to the grid is actually supportive of this strategy from a cost perspective?
Kenyan sells the sector in which it stands is a monopsony, where KPLC is the sole buyer, and the transactions are captured by 20 to 25 year power purchase agreement. That's usually what goes on. With, of course, scope for volatility in dollar prices and perhaps oil prices. So having said that, the one source of growth is through increase in power generation. It helps that we've had, you could argue, good hydrology, so that helps. But you see, demand in Kenya, power demand is quite high. There's part of it has been captured in statistics. I think quite a bit has not. So the offtake, I think KPLC is able to grow distribution by at least 15% every year. I think they target 20%. So you can see there's a lot of scope for growth on the demand side. All they need to do is just handle what is on the supply side, and that is really growing their power generation. And I think they want to do 5,000 megawatts in the next couple of years, I think till 2015 or so.